today's topic, IFRS 13, Fair Value Measurement. Enjoy. Now, what if an entity is unable to determine the principal market? So what if there is no principal market? Now, if there is no principal market, IFRS 13 requires the use of the most advantageous market. So when there is no principal market, so partly because there are two or more markets which might be almost similar in volume, so we will base on the most advantageous market. So the most advantageous market, it is the market which will give the entity the highest value for its asset or the lowest amount for its liability. Okay, when considering the most advantageous market, there are two issues that may arise. That is transaction costs and also transportation costs. Now, when considering the most advantageous market, we have to take into account of both the transaction costs and also the transport costs when computing which market is the most advantageous. However, when we would like to determine the fair value of the assets, then the transaction cost is not considered when calculating the fair value. Only the transport cost is being considered. So that is regarding the first part, your financial and non-financial assets. Now, what about our financial, liability, and equity instrument? So what if an entity has a financial liability or equity instrument? The very first thing an entity should consider is, do this instrument has a quoted market? If the instrument has a quoted market, we will then use the quoted price. If there is a quoted market, so we will use quoted price without adjustment. So we have to use the quoted price without any adjustment. And this is actually known as the level 1 of the IFRS 13 fair value hierarchy. Now, if there is no quoted market, then the next issue is we have to ask ourselves whether is there an identical item held by another party. So if it is a yes, we will use the fair value of the identical item. This is the level 2 input. If there is no identical item, then we will have to use a valuation technique. Now, the use of valuation technique involves the use of unobservable input. So this is definitely the least reliable among the 3 levels of hierarchy when determining the fair value. So we can actually use the present value approach in order to value the financial liability. So that wraps up our discussion on IFRS 13.